This is our Forex blog for February 24th, 2012. And like we do most days, we buy the strongest currencies versus the weak and sell the weakest versus the strong. The two weakest ones are the dollar and the yen. The yen starts the day off being much weaker than the dollar, which you can see. The strongest currencies are the euro and the Swiss. And the Australian has a weekly and monthly trend, which is on the bottom, that's up. And the New Zealand is also extremely strong. Although today, because it's been up too much recently, it's kind of having a pullback day. But nonetheless, when you see an incredible amount of strength like that, if all the time frames line up, most of the time that trend continues, like you can see here in the euro and the Swiss. And really, a lot of times when you see real-time strength followed by less weakness, real-time strength, almost no weakness, usually the real-time momentum continues whether the daily, weekly, monthly trend below is up or not. So that being the case, you want to buy the euro versus the weakest yen. You bring up the euro-yen chart. You can see the hourly moving average right here. When we get above the hourly moving average, the trend's more likely to go up. This was just one hell of a strong trend today. But most of the time, you really want to be careful buying above the upper white band. I will occasionally do it if, in this case like today, the euro is the strongest and the yen's the weakest. But you're usually better off looking at something like our range charts to find those trades. Also keep in mind, each night I do Fibonacci analysis. Most of the time this first and second fib target is going to be the end of the move, and you're going to get a reversal, usually 30 to sometimes 100 pips down when these get hit. Today it hit this level, and there was some selling here. It went sideways for 1, 2, 3, 4 hours and then broke out, completely carved through the next fib profit target and stopped at the 2.0 level, which almost never gets hit. I mean, maybe once every 2 months you will see that level get hit. It's very, very, very rare. Here's a 6 pips per bar chart, range chart, and it also shows our build your own trend tool, which I'll show you what the settings that I use are. This allows you to customize our best statistical trends to fit the style that you want to do. It only works live because it's using multiple different time frame data, and a range chart doesn't line up with any time frame. In this case, the 6 pips per bar range chart, the 6 pips could move in 2 seconds or 1 second, or it could take 10 minutes if the market's dead to move 6 pips. So, it's impossible to line up multiple different time frames on a chart that doesn't even have a time. One bar might be 30 minutes, and like I said, the next one might be 1 or 2 seconds, especially if news comes out. So you can see that, the trend candle statistical tool, I have 15% weight using the 5-minute data. FX Power Index, 15% weight with a 15. This basically shows what percentage of currencies are above their 15-minute bar or 20-period average. I have this set for mostly fast trading, scalping. 15% weighting for this. This is a very fast indicator with a 5-minute bar. And the bottom two measure intensity. ADX Trend and Momentum Pro. Momentum Pro measures how much each bar is moving compared to the last 20 days average for that time of the day. So I give that a huge 30% weighting. Because if markets aren't moving that much, you're not going to see many extremes. Anything at and underneath the 80 level, or anything significantly underneath the 80 level, is just really not that strong or not that weak. If you're going to trade currencies that are really taking off like this, it's really better to use our range charts, and we have a custom trailing stop that is based on this build your own trend technology, and you can set it with any multiple trailing stop you want. And when the market's gone up statistically too much, we have a very, very tight stop. But when currencies are as strong as they are today, you can see it caught almost every pip. Got you out at 57 versus 68. It caught every pip of this minus only 11 pips. You'll probably never find a trailing stop that's as powerful and as close to price action as this. I mean, a lot of traders actually use it as their entries. In at around 50, out at 75. This isn't really as much of a pullback for me. I prefer a little bit deeper pullback, something like this. But nonetheless, if you had bought this here at 77, the trailing stop got you out at 74. You lost 3 pips plus the spread. Now this is a counter trend signal that probably about 80–90% of the time, in my opinion, is the end of the move. So you might want to really kind of wait and see what happens after that. There is no counter trend move. So after giving it a while to have a counter trend move, and it doesn't, when it breaks out, You might want to go long here at 95, out at 03, very small 8 pip profit. This one's huge. 03 is in, out at 57, 50 pip move. And at that point, really, I wouldn't expect it really to continue up that much. So myself personally, I wouldn't buy this one, this one, this one, this one, and so forth. I kind of would like to see it go sideways up here for a while, and then once it breaks down, I'm going to sell it. Way above the 2.0 band, or I'm sorry, the 3.0 green band, markets almost always reverse. It's just a matter of time, usually 30 minutes it reverses, kind of like this one. But this one just didn't pull back that much. Now, early in the day, the dollar was strong, and then at around 3:30 it became weak. The euro was extremely strong, so you can also trade the euro dollar. I mean, I have a whole bunch of charts up here that I move my monitors around, so let me move that out of the way. This one's a little bit lower risk than the euro yen because it's not already above the upper bands when you start looking at trades. The trend is up as well, and you might buy this little pullback right here. There's not that much weakness. When it starts to go back up or the bars turn green, you go long. You can see it went up about 10-15 pips. Previous day's high is a resistance area right here, so you might really want to wait for that to break out before you get in again. 82 goes all the way up to 03. And we have a bunch of different systems, but mainly 2 entry methods. Rectangle, I prefer at least at the very minimum 30 minutes of a rectangle pattern when it breaks out. Usually when you get a 2-hour or longer rectangle pattern, when it breaks out, you have a nice trend. You can see it went from 3,400 all the way up to 26. You always want to draw your fibs on the last wave. Most of the time it's not going to go above the 1.618 without either going sideways for 30 minutes, 2 hours or more, or pulling back. Now you can see when this finally broke out, it just took off, and our trailing stop did a really good job of getting you out here at 60. You would have been in that trade here at 17. Again, this is another example of multi-hour sideways, rectangle pattern. This one kind of pulled back a little bit more than the first one. It made a lower low right here. But when it went up and came back down and didn't make a lower low right here, it's pretty safe to buy the breakout right here, expecting it to go above the high. Once it does, it just takes off. I don't typically leave up in running the Swiss pairs, but we'll bring up and just show the Swiss yen. Very, very strong trend pretty much all the way up. So you can basically see this one just kept going up. You have a multi-hour sideways range right here, breaks out, goes sideways, breaks out, kind of like a little wedge pattern right here, and just continues and continues. Same thing with the dollar Swiss. Weak dollar, strong Swiss after 3. Here's 3 o'clock. The dollar started to show some weakness. Then you have that multi-hour rectangle pattern like I just described, and it falls about 15 pips. I would have personally, because of the weakness, sold this little pullback right here with my stop right above the high. More than likely, I would have just got out of this with a small loss or maybe a small win. If it doesn't go my way, usually within 30 minutes, I use something called a time stop. And then when it breaks out again, you go short. And this is a very, weak currency, so it's very likely to go down to these fib targets. And guess where it went? Right to the 1.618. If it stalled at the 1.382 fib target, I'd get out of half and use the second. Usually I would put my stop above here, and or if I had a trailing stop on it, we'd use that to get out of the second half. But if it stalls at the 1.618, usually I get out of the whole thing. This last trade right here was short at 80, out at around 40 for a big 40 pip win. Keep in mind, the only secret to trading is small losses, bigger wins. There's nothing else you really need to focus on doing. Now keep in mind also the CAD was weak today, so you could have bought the Euro CAD. Notice the explosive, 100 plus pip move there. You could have sold the CAD Swiss. Look, just straight down. And that's really the whole purpose of using our currency meter. This is maybe 5% of what we teach in all of our classes and videos. So if you're watching this Forex blog, make sure to watch our classes so you can learn how to use this in addition to all the other tools and systems and methods that we teach. But this is, for new traders, one of the easiest ways because you're focusing on trading in the currencies most likely to continue, trending one direction. So it takes a lot of, you don't need to know a lot of the support resistance and all the other, probably 50 other things that we teach in order to use a currency meter.